ladies and gentlemen. We are going to kick this week off, or this segment off, by learning how to do DD properly. Um, Today, we're going to be using the example of the blue chip stock called Disney. Obviously, everyone and their mom has heard of it. Look at the number of people on Robinhood alone who have invested on it. So, everyone has heard of this when near a tenth, if not a quarter, of all Robinhood users are own a portion of it. So obviously we all know of Disney and their water parks. They own Marvel, and well, some things you may not know is they own the what are they called? Not real estate. They obviously own real estate, the parks, which is a huge money goer. They just recently opened up Disney Plus not too long ago, and the studios and entertainment. So yeah, so we're gonna look at the 5-year chart, see what we're looking at. Oh man, I gotta $sign DIS. So we're gonna look right here, and we're gonna look at the max chart. So obviously when they IPO'd way back in the day, this would have been a killer deal. But we're not really looking at that. We're looking at the course of the past 2000 since 2000. So since 2000, that noise is bothering me. Since the year 2000, we're pretty much looking at a steady incline, or actually a slight loss. We're gonna look at the last real recession right here. So if we look right here to here, yeah, they took a little bit of a hit, but even right here, they would have been a great value buy. What makes them a big overall conglomerate is the amount of money they rake in every single year and what they have the ability to buy. But if we look at the 2008 till last, yeah, that's a good ROI if you were able to buy it and hold it for that time. But like I said, everyone knows Disney, and that's why we're going to be going through this. So we've seen the chart, we know roughly what they do, but to do your due diligence when looking at stocks and what you're getting yourself into and your share list or your follow list, you really need to know what they have. So I'm going to link this in the top of the description, but we're going to look at the companies that Disney owns and the assets. I mean, this is obviously I didn't know. I didn't look into this because I wanted to give everyone a better understanding. I was going to go through multiple websites, but this, oh man. So we're going to look at the sources real quick. Sorry about this. The Walt Disney Company.org, Steamboat, TVC, portfolio, Wikipedia lists Disney assets. Um, yeah, I mean, obviously the source is there, and what we really need to look at is what they have to offer. Obviously, we know they have their parks and Walt Disney World. I want to say there's about there's 5 parks. I was gonna be wrong by guessing 8. But I still might be wrong on that question. But what we're looking at is Disney licensing. You got the parks right here and the enterprises. Obviously, right now with quarantine, that is, or regaining that is kind of an issue. Recently, they picked up Pixar, so they got the animation studios to make the movies. They got recently acquired Marvel, I want to say 2015 or so. That's been just printing money for them every year. Um, they also got Fox Entertainment and ESPN not too long ago, as we can see some of the, where am I looking at? Fox, the Fox Corporation. That was a huge deal. Sky TV, this Australian or British network. Uh, I mean, you can go over all this stuff right here, and we can really get understanding of how massive they are. Um, all these channel networks. I saw it earlier. Okay, yeah, sorry, ESPN right here. Um, pretty much this March Madness, pretty much all the major sports that you may be watching are covered in here, and it's really mind-boggling. Okay, the Red Creek. I'm not sure what that is. Okay, so UTV, this channel, all the TV channels they own. So if you really wanted to, you could go over all this stuff. ABC as well. Okay, that's ABC Worldwide, Times Square Studios. I mean, there is so much that they own. Star Wars, they ran that into the ground. Um, but yeah, there is so much to look at. Um, so I'm gonna link this in the description. It's a really cool thing to actually look at and understand. Uh, of hey, this is really what they're worth and whatnot. So we're gonna go back to right here, and we're gonna look at the market cap. And from this, you can tell what the market believes based off of this number right here. Sorry, what this number right here is saying. At, at this evaluation, they are worth $208 billion, which, hey, they're still one of the top. Oh man, I'm not even gonna quote this. They're still one of the top companies in the world. So yeah, that is a huge organization or a huge, big deal. Um, I'm gonna have to. That didn't do anything. Sorry. Okay, so obviously with a company this size, they have debt and assets. I believe there's a way to go about looking at this and check, but I'm not really going to get into it right now. You see the amount of employees, for the yada yada yada. So once a company receives so much money that they honestly trying to keep people invested into it, they look at dividend yields. And so from where I remember it being explained to me, the best was the fact that um, you it's in lieu of marketing or advertising. So that being said, they don't really need to push themselves to being bought in a way, shape, or form. Um, that was a horrible explanation, but yeah, that's pretty much what it's looking at. As well as over here, you see the news. I'm not going to get into that. You get the analytical rating, and really, if we're going to look at, God, I'm sorry, guys. If we're really going to look at this, we're going to look at the chart right here, and if we look about, if we look right about here, we're trading at a price about 150 at the high, and before it fell off, which would have been right about here, has been a true indicator of hey, this is where the company is actually valued at, and it's about 141. Today price of 115. Yeah, you can see some room of growth, but in the short and distant future, it's gaining at a. Oh man, I'm gonna cheat here. What was 83 to 120. Uh, I'd say in about 6 to 8 months it should get back to normal. But right on the other side of the screen, we're going to see the order block size, and so what we're going to be seeing we're going to be looking right here and ignore this line right here. That's not really what it needs to be focusing on. That being said, we're going to look at today's chart. This is the volume size, buy versus sell. Uh, right here, you saw a lot of buy, which pushed the price all the way up right here. And as you can see, right about here, just a whole bunch of sell orders being overvalued at that current time. So that's how you practically look at a chart. There's a lot more lingo. This is technically volume. This is the price. This is the chart over time. Yada yada. All stuff we should all know by now. We're going to look at, these are the buy order size and sell order size. These are arranged by price. This is the spread between this, what people are looking at. Oh man, what time is it? It's about 2:10 right now. So obviously the volume's not being what it was earlier in the day. So you're not going to see as much of fluctuation as right here because volume's not present at said time. So what we're going to be looking at is the spread. It's somewhat stagnant for the time being. Like I said, volume's not there, so it's not going to really push too much. So we're going to go to another chart. I've been watching this one all day. And disclosure, I held this for between, oh man, where did I hold? Bought it here, sold it here-ish. Yeah. There was some volume, not too much. So yeah, sorry, we're gonna look at the spread right now. The spread is 25 cents. So yeah, that can make or break you when you're going to buying and selling. Uh, back to the other chart. So obviously this is the volume, the average price or average volume size per day was 24 million. It's a Friday, so you're not going to see that type of movement. On Monday, you're definitely going to see, if not more, of a movement. So, that being said, this is, we're going to go back to this chart right here. When you go buy and sell, this is what's called slippage. Uh, trying to fulfill, if I'm selling 1,000, ouch. If I'm, okay, we're gonna use this as an example. 3,000 at this price right here. So once this gets over that $1,550 a share, it's gonna try to fulfill these in first come first serve basis. That being said, a whole bunch of people want to sell at the, so you're gonna get some sort of, okay, and just like that, yeah. So we're at that price, hit filled, went. Um, how to explain this? Obviously, the person at this price right here, you're gonna say that I'm one at $150 and just leave it go. If you actually want it filled by the end of the day, you're obviously want to short sell it. Excuse me, wrong word. You're gonna want to go right under it so that you fulfill your order before they do. This is especially important late in day. If it's close and you know it's going to fill, then yes, you're going to want to put it at that price range. Oh man. Oh man. Yeah, volume's not real there, so it's it. I would expect it to end right about here at end of day. I don't care for it either way, so I'm not gonna claim to be the expert on that stock. That being said, we're gonna pretty much call it an end. Um, the link of this will be in the description. This is exactly what you should be looking for. Obviously, it's not gonna be this simple to look at said stock is listed in. That being said, uh, please, when you're picking out stocks, make sure you know what they're in. So yeah, do your due diligence, find the stocks you like, put them in your watch list, and that being said, have a great day.